Good morning, trading world. It is March 19th, 2021, just a quarter after 8 a.m. And this is my pre-market outlook. Going into today, we have Expiration Friday, not just the standard weekly expiration. This is a quarterly expiration, which to me means extra fireworks could jump off today. Getting into the charts today and looking at things, what I want to happen is or may not be the likely scenario. But before I get into that, I need to explain to you that my overall outlook is bearish. So right now, I am bearish. But expiration days can see some strange things happen. So being that I'm bearish, the great scenario for me would be to see a pop up on today to about here, which would give an excellent place to short. Back off the VIX, take some juice out the puts, making them a little more affordable and being able to short there. However, what I get may be something completely different. Today is going to be different. There are a few things to pay attention to today when it comes to where, or clues to where we're going. One of the most important things today, because the way today is shaping up, I'm probably going to wait 20 to 30 minutes in or after the open to kind of identify the day structure before I make any additional moves. I came into today short. I do have a couple of short positions on the SPY. But before I make any additional moves, it's going to be key to kind of determine or identify what type of day structure we have. And I'll get into a little bit of that here. To me, there are basically four different day structures. You have a range day, and a range day is pretty much where you go from one end of the range to the other. It's a great day for two-sided trade. This is a day where your moving averages, not your moving averages, but your Bollinger Bands and things like that work really well. Because you're going to start, if we open here and you get the upper end of the range, like that's your Bollinger Band, and then you also come back down and test the lower Bollinger Band, and you just kind of bounce back and forth in between that area for the day. And that's what I would identify as a range day. You have the trend up day and trend down day. With the trend up day or trend down day, it usually starts off with a gap up or down. So let's say today, which is going to be very important, we closed at 391. Let's see. Yesterday we closed at 391.41. So 391.41. So let's just say that that area is here. We would usually open up a gap down. Let's say if we opened up here, you would try to get a retest of that area but fail. To try to close that gap, and then for the rest of the day, or at least until 1 o'clock, you would get this strong downtrend. And this is a day where your moving averages are going to work very well, because you can use those to kind of plan entries and exits, where it'll ride that trend line down, so that any test of that trend line could look be a great entry, and then you would just ride it down. And as long as each candle closes below the midline of the previous candle, you could pretty much stay in that trade. So that's the downtrend, and the trend up day is going to be the exact opposite. You're going to have a gap up, and it's going to try to come back and fill that gap, and then take off up. Pretty much the same way until maybe 12 or 1 o'clock. You'll see it back off later in the day. And the last is what's called a rounded reversal, in which I like to think I coined the phrase trange day, because it's a combination of a trend and range day. It's going to be pretty much where if you open here and you have a rounded reversal, things head up for the first half of the day, and then strong down the second half of the day. And that's what I would consider a rounded reversal. So that's going to be very important for today, because with all the different dramas going on with bonds, with rates, and the conditions that I'm looking at, because different time frames are at odds with each other as far as conditions. When I say condition, I'm talking about your RSI. If you use like a regular RSI, or like me, I use this RSI Leguier. This represents a condition, and the condition here is that it is overbought. Anything up here in this red area is going to be considered overbought. Just like on your regular RSI, anything above that 80 area is going to be considered overbought. And below, in this green area, this is going to be considered oversold. The same way on the regular RSI, your reading below 20 is going to be oversold. And I call it a condition, or it's called a condition, because we can stay in that condition for an extended period of time. It's not a trigger. It's not a trade trigger. It's not anything to really plan trades off of, but it's just a condition to kind of let you know where we are. So here we're in a overbought condition, which means it's much more possible that we can reverse here. to kind of ease out of that overbought condition. However, there are also different time frames, and different time frames deserve will place a more important role, or play a more important role in determining where the day will be headed. So that's a big deal for today, which is why I'll kind of wait around the first 20 to 30 minutes to kind of identify what type of day we're in. In getting to the outcomes that we have today, it's going to play a big role. The first outcome I'll be looking for is one that I really want to see happen, but I'm not quite sure, so that's why I have the 40% probability on it, because things are kind of shaping up one way, but this is the day that I'm feeling the most. Let's say we hold this support area of 388. If we can hold this, we're going to bounce. We're going to bounce up. And it's possible we could shoot for this 393 area here. And that's going to be a decision area. If we can't break through that decision area, we're going to shape up into either the range day or a rounded reversal, depending on how long it takes us to get through this chop to get up here to this 393 area. But like I said, I'm bearish, so I'll be looking more so for us to come back down off of that 393 area. However, there is a possibility with this being an expiration day that things can get pretty crazy and we see a breakthrough that 393 area, which will take us back to retest the highs. Is retest at least the 397 area. So a break of that 393 will open up the door to go see 397. So that's the first outcome, which I'm placing a probability of about 40%. The second outcome we're looking at involves what I call the trend down day. And trend down, we opened at 391, well, closed at 391.41 yesterday. So if for some reason we can't get back to this 390.41 and we open up a considerable amount down from that, at least somewhere down here, we open up on that part of the range and we fail at breaking through that 391.41, that opens up the door for a trend down day. And that trend down day is basically, it's going to look just like that. We're going to have a long ride down for most of the day. So that's going to be outcome number 2. Outcome number 3 is that we're going to consolidate here between this 388 area and 391 area. And we're going to consolidate here until we get either a break lower or a break higher. And given that this is an expiration day and we got a lot of ground to cover, I don't really see us consolidating very long, but then it's possible. So the keys to look here, when we consolidate and we near the channel, or we're nearing the breakout phase, is to kind of identify what condition we're in. So the condition is going to play a major role, as also the type of pattern we're going to be in. I'm not much of a pattern person. I'm more, my technicals range more of looking more internals and playing the volume. So if we begin to build this wedge going up here and volume is still trending down, that means weakness here. It means more likely the break is going to be to the downside, and vice versa. So this is pretty much what I'll be looking for. I try to trade what's in front of me, but it's really key for the way that I trade to have these kind of pre-prepared options, so I know what to do in the case of what happens when we get here, or what happens when we get here. So being prepared in that way helps me. That's what we're going to be looking at today. Hopefully we get a pause in bonds and rates. If the bonds can stay above 153.3 and rates don't push sharply up through 17.55, I think we have a chance to get back up here and retest this area. And like I said, this is going to be a decision area in itself, where you have to pay attention to either your indicators, definitely volume and internals, to see whether we have enough strength to break through and keep going, or we fade this area here, which is me being bearish. That's the outcome that I'm looking for, either the fade today here at this area, or possibly coming into next week. So that's what I'll be looking for. I'll try to, for those of us in Reddit, I'll try to drop a name or something 30 minutes into the session to kind of identify the actual day structure and some of those decisions that have to be made later into the day. I'll try to come back and make a comment about that if things aren't moving super fast and I'm able to do that. But that's where we are today. Again, this is one of those days that can get really crazy really fast because it's a quarterly expiration. So as always, know your risk. If you're trading options or whatever it is you're trading, make sure you have a bracket to kind of limit your losses if it goes against you. That is a must for this environment right now. Wishing you a profitable trading day, and have a great one.